Hey traders, welcome to another edition of the Crypto Lab with Alex, featured by Trading Analysis. As usual, we are going to go a little bit over macro scenery and cryptos, of course, as well. Lots of things to cover. As you know, the geopolitical situation is still raging in Europe and around the world. We have lots of inflationary pressure. Fed is looking to hike 50 basis points, most likely in the next meeting. Yesterday minutes reveals that the Fed will start a QT or withdrawing the liquidity, which is actually opposite of quantitative easing. I think they will let maturities just to actually expire, but nevertheless, they are looking to do 93 or 95 billions per month, but not immediately, but gradually. So, in combination with moving rates on the upside, that kind of has a double effect because the Fed is behind the curve. We have talked about the yield curve a lot last time, and on the shorter end, they have still a lot of catching up to do. We have seen a couple of durations inversion in the last couple of days. So I'm not going to go back to that. I'm going to start with covering of the 10-year yields and a little bit situation in Europe. We will look also some of the commodities picture, and then we will switch to cryptos. So please leave your comments and in the chat box, and also you can leave some requests for the cryptos we can view together when the main presentation is done. So let's start. Let's look what's going on a 10-year yields. Let me just glare this chart for you. I have, of course, in the last, I think, two crypto labs ago, we have abandoned a possible A wave for the to be a shorter from this resistance to the downside. We counted this more correctively, and then when we saw a decisive breakout, we are starting to see a possibility that the 10-year yields will test this 3.2%, where is the next resistance levels for the yields on the upside. As I said, Fed is going to hike, and they are now even mentioning a possible hike in between the meetings because the Fed would like to be more closer to the real inflationary pressures. We started to look this more impulsively, I think, from the last week or the week before. I don't remember, but anyhow, we will start to look for a possible wave 3, 4, and 5 for completion at least. Looking for a small pause and then a continuation on the upside. So this is the wave count we are going to track now. That the 10-year yields will go actually in a 5-wave move instead of A up in down in B, up in C. So we will look for a 5-wave move, then a small pullback, and then possibly continuation in 2023 further on the upside. In the European front, we are seeing this is the larger time frame wave count. I don't have a wave count, just a kind of a trend line channel. This is the yields on the 10-year bond, and of course we have a price as well. We are already at my support levels, which most likely is going to be broken, and I'm going to tell you why. So we were looking for a possible support levels here, and I will most likely, after a small pullback, will have to move down a support zone lower. As you can see on the yield fronts, which is just an inverted chart, we are kind of testing this channel on the upside, and we might face a little bit of resistance pullback, but then looking this 3 months Euribor forward curve, you are seeing that market is starting to price that ECB will actually hike rates until sometime of December 2023, and the rate should be around 1.25 at that time. So most likely from June, I don't know the schedule in my brain in regards of the every meeting of the ECB this year. I think June, July is the next one, and in September. So one of these meetings, most likely the ECB will start to hike rates on the upside, and this forward curve actually pricing that the rates will continue to rise until December of 2023, and they should be around 1.25. So in that respect, I don't think that this resistance lines will hold for much. Inflation in Europe is moving pretty rapidly on the upside, caused by this geopolitical situation in Europe. Prices in Germany as well as in other EU countries are moving on the upside, even from 20 to 40% on the upside. So inflationary pressures are starting to kick in really hard. And that will, I think, make ECB looking this forward curve as well to start a hiking cycle, which I think is going to be more moderate than Fed, because the economical situation currently in Europe is vastly different than in the United States in regards of almost every aspect of it. So I will agree that Fed will most likely go above 2%, and that ECB will stay around 125 in the next year, year and a half in a hiking cycle. So if we look the dollar index, dollar is going higher. It is now actually bumping into our 786 resistance levels from this move on the downside. I have switched this into a triangle because since the geopolitical situation and especially situation between the Ukraine and Russia unfolded, dollar is still a safe haven. It plays a role still of a safe haven asset. So we have to be careful in calling the end of the dollar bull run. I think it will be unwise to do that in this situation. We have to adjust. Anyhow, I'm going to monitor possibility of a small pullback and then a continuation. Of course, if we see something more larger on the downside and of an impulsive nature, we will start to look this just as an ABC and potentially further recovery. You are hearing a lot of story of the world going out of the dollar standard. As you know, the Russia is now demanding all of the commodities to be paid in ruble. Russia and China has been de-dollarizing for the last 10 years almost. So this is not something new, especially after these sanctions and freezing of the assets of the Russian central banks, which kinds of gives a bitter taste in a sense of weaponizing the financial system on the political front. And in that respect, some of the big macro thinkers are looking for de-dollarization in the next 5 to 10 years. So every country which has been through the history having a reserve currency that of course doesn't last forever, and we might be possibly on the verge of something like that in the next 10 to 20 years, because that is a slow process. It doesn't go at once. So I do not expect this to see too much on the dollar front. I am looking if the dollar starts to pushing strongly lower, that will be a completely different reasons why the dollar is going down than for now the de-dollarization effect. So if we go and look a little bit what's going on the stock market, I just draw accidentally, not accidentally, but as a form here, a triangle. I really don't know still what is going on. Here, this can be also on the S&P a leading expanding diagonal. This can be just an ABC pullback and we can continue lower. As long as we trade in this range, we can not really, with a greater certainty, have a much of a visibility what's going on the S&P and Nasdaq. So I'm going to wait. Market definitely will maybe start to price in a yield curve inversion in the couple of months, because we don't see a complete yield curve inversion. That will take at least 1 year, I think, timeline to happen. So I'm really curious how the market will process. And of course, the 4th May meeting, which is going to be in 20 and some days, will definitely make or break this market either on the upside or on the downside, I think. So let's not run in front of the market, because we don't know in regards and from the respect of Elliott wave sequence, is this a leading diagonal or some type of a complex pullback, and then this is 1, 2, up in 3, 4, and 5. So we will see that in the next sessions to come. So I would like to leave this open without any labels until the picture becomes a little bit more clearer in this respect. If we look some of the commodities, oil is consolidating a little bit. It went up to 137, now it's trading around 102. Looks like a small consolidation. I don't see any impulsive signs to the downside of the oil yet. So I would like to see what the oil will do. Some type of a consolidation is also a kind of a possible here. As you know, the oil market is suffering a lot of things in regards of increased supply. Russia is one of the biggest supplier in the world. Definitely this will be felt, especially in Europe. Also, the Saudis are now also talking with the Chinese, possibly to price the oil in Chinese yuan on that side of the world. So lots of things is also geopolitically happening there. So I will not call this the end of the oil bull market. I would like to still open for a more advance on the upside, as this is looks like a small consolidation. And if you look the bigger time frames, where we can see that this pattern potentially still not unfolded completely. I have a little bit of a higher targets, almost double on the upside, and I'm just kind of waiting and to see some impulse moves actually to lock in a possible third wave on the upside. So there is as you can see, a nice support zone here, which is at the same time also resistance. So technically, it is also, you can say, for the oil market, the support levels will be around this zone here, which comes around 93 to 95, and the upper resistance zones, as you can see, previous high where we bounced back was at 147 or 48, going back to 2008. I have this chart which goes almost a couple of or 2 centuries ago. This is on a trading view. You can put a line chart here and actually get a full view. This is 1862, so 1, 2, very nice wave 3 on the upside. Potentially this correction is done. I don't think this is all what we are going to see from oil. Even if I have heard some of the suggestions that I should count this as a 5 waves up and a pullback, that's also viable in that case, but I cannot see in this situation oil going back to 70. That will actually need, for that price to come down, either some peace talks will be necessary, or we will see a larger move down in equities. And of course, oil will follow the risk-off element, and let's see up to which extent. So oil, as you can see, is still in consolidation, so let's leave this to be more open in regards of the future move, either up or down. CRB index is still trying to make a small consolidation here. 5 waves up, potentially not over. I'm looking what is going to happen here. Usually when we look for the 5th wave target, we have 2 targets. One is actually a projections from wave 1 down to 2, up in 3 and 4 to measure for the wave 5. So actually you can basically, as you can see, take your tool, put it in wave 1, and then going through the wave 3 and wave 4 to get upside targets. The second one is at 371. This one is at 303 and is already reached. Obviously, we can see a 5-wave move. So after a pullback, we can potentially also expect a continuation further on the upside. So inflationary cycle is definitely on. I see many people trying to try to see where it's going to end. So we will see that. I think it's still early in this maybe even a cyclical cycle of inflation to know how long. Usually this, if we are dealing with cyclicals can last from 1 to 3 years. So in that respect, looking from that perspective of cycles, this might continue further higher after a small pullback, either from here or on the upside. Soybean, also I chose this chart because it's a very nice, very simple wave count. You have a beginning of the already this leading diagonal started in 2019. We have a wave 1 pullback down in wave 2. Of course, when COVID struck in 2021, we have seen a supply side shock, a large wave 3 on the upside, pullback in a wave 4, and now we are seeing a very nice pattern, very clear pattern on the upside. So if we go on daily, you will see 1, 2 very nice visible 5 waves up in a wave 3, consolidation in a wave 4, and potentially either from here or a little bit lower. This is a base channel encompassing nicely this move down. So if we get 5 waves up into this zone, pullback may be interesting for a further continuation up in this 5th wave. So if we sum up this general macro situation, of course, it is not easy to derive that we can say that actually commodities is still on the upside, inflation is going up, Fed and ECB will most likely go into a hiking cycle. Japan has a yield curve control at 0.25, so they're actually trying to tame inflationary pressures now. They didn't have inflation for, I don't know, 20, 30 years, which is pretty contradictory. But we are going to see, of course, what is going to happen on that front. From all sides, we are seeing the pressure on the central banks to move additional liquidity out of the system. So that will have to affect some of the markets, and we all have to think how that will actually plays out in cryptos, because correlation is relatively high in the last couple of weeks, even months or two, with the Nasdaq, SMH, Nvidia, with the Bitcoin chart. As I said, my thesis was if we see Bitcoin goes up in this situation, which has held pretty nicely so far, that will be from a couple of reasons, either because now Bitcoin is mirroring different titles, so we can view it from the side of let's say store of value. If we see a more devaluation of the fiat currencies, also we can see it as an inflationary hedge on the upside. Also we can see it on the side in regards of trading yield if the stocks go lower. So we have to think from where, and I always pose this question, if we look this total crypto market cap, which still looks like a triangle, where the money will come from and why the institution will actually start to buy cryptos. I posed that question on the Twitter. I didn't get many answers on that front. So if we look a little bit more objectively, the retail side will be pretty much crippled, because with such a higher inflation, there will be a less available income, and people will most likely spend their income more of trying to survive this inflationary blow, cost of energy, cost of food. So I don't think they will switch too much to cryptos in that respect, and has at least some influence on the price moving on the upside. So I think this move on the upside has to go from institutions, and I'm thinking actively why the institution at some point will actually start to buy cryptos, namely Bitcoin and maybe actually Ether and a couple of others, and start actually to generate this fifth wave on the upside in cryptos. So that's a very good question. I think everybody needs to think. We will of course look at it from the technical side. So this chart still stayed the same, 23%, 0.6, which is a usual level for triangle, still holds. I will not change the triangle until this level here breaks down, and then my wave 4 target will be lower. So for now, this triangle works nicely. I would like to see it a little bit more higher, which I will explain you on the Bitcoin. But for now, the general picture didn't change. Wave 3 here, March 2021, we were starting to go bearish on cryptos while the market was 99.9% bullish. And as you can see, this was just the blindness of the sentiment on the upside that also repeated here in November 2021. Of course, this type of corrections are designed to actually wear out many traders who goes short and long, and triangles are most difficult things to trade. Most people which are trading short term are losing money in this type of consolidation. So I think also a lot of retail are hurt by this consolidation during this year and a half time. But anyhow, we're gonna stay with this actively thinking why from the fundamental side cryptos will start to move further, and this chart still portrays a balance of forces between the wave, between the bulls and bears, and the wave 2 and the wave 4 we look as a corrections before the final move on the upside. So in regards of the Bitcoin, a couple of interesting things. So Bitcoin, of course, is challenged by 200 moving average on daily. We have shown that on the last crypto lab. I'm going to show you a larger picture. So with a couple of possible things that we are looking with our members to happen here. As I said, I would like to see Bitcoin goes up in a D wave. Usually when you have these alternating legs in triangles, we have some of the necessary fib ratios. They are not rules, but it's nice to see them when you see some type of triangle unfolding. So in that respect, I would not like actually to anchor a C wave here. I would like to see more upside between 52 and 56K. From these levels, we are close to invalidate ABC, but that's not much of an importance because this can actually morph into a more complex correction. So you can have this as an ABC for W, triangle X, and then you can have another ABC. So let me just show you that. So, but still, it's a very sideways affair, as you can see. So we can actually name this as an ABC, triangle, and X, and then we can form some type of an A wave on the upside, B, and from these levels of around 40K, we can start to move further on the upside in the final A down in B, up in C wave towards this target for the possible D wave. So I would very much like to see this level reached, because this will give me much more confidence that the triangle is in, and then we will get a little bit more pullback down to 40K. I still think 40K is a very crucial level and a very strong level. Of course, with the 30K, which is just a little bit below, as you can see here. Wave count invalidation on a triangle. I think we can move it now in a C wave, so it will be 32,917 on the Bitcoin. Let me show you my alternate wave count in a case we break in this new monetary regime at 30K. So this is actually some of the pattern I'm looking. I already explained that the most visible point and the strongest support level actually for the Bitcoin is between 20 and 23K. And that is not for nothing, because if you look this a larger time frame chart, actually this 200 weekly moving average was actually behaving very nicely, holding every possible these large corrections on a Bitcoin very nicely. We had a little bit of a break in COVID crisis, but that's normal. Well, I don't think we're going to have another virus with this type of event. We might have something else, but I don't think it's going to be on this level of ferocious move lower. We might have a gradual continuation to the downside. So my 30K level will be a crucial one. And here we have something which you can call a really complex corrections in the Elliott wave. Guidelines suggests that the wave 2 was simple and the wave 4 should be complex, either a triangle or a flat. You have many combinations, and usually you would not know that until the consolidation is finished. Let me show you this one. I have posted that already a couple of months, I think, ago on my Twitter page. I will show you that correction, and this is also the from the book, from the Proctor book, which is a kind of considered a Bible in the Elliott wave world. So as you can see, this correction actually depicts a combination. As you can see here, the first part of a correction is a flat, which means flat is usually 335, which is very well displayed here. So you have a 3 waves down, 3 waves up, 5 waves down. That will be a W. Then you have any tree, which will be an X wave, and then you have a zigzag. Okay, so it's a combination between a flat, any tree, and a zigzag. So zigzags usually have 5 waves down, 3 waves up, 5 waves down for a Y wave, and then correction is actually done, and we can continue in the further direction of a trend. You can see my chart posted then, which actually is very valid now. This was the first part of a flat. I will explain you that on a larger chart, but I'm just showing you for the reference that actually this wave count actually unfolded very nicely. We moved a little bit more lower. We are now possibly in a B wave towards 200 moving average, which we already reached, and potentially we might move down if we break 30K to the downside. So let me just show you this more precisely on this chart, which is on a weekly level. We can go on a daily level, so we can go in a nitty-gritty of this wave count. So this will be a flat. This is a 3 waves down, 3 waves up. We have one very nice ratio which depicts that, which is 127 ratio, which will look actually is an extension which will look for a possible B wave. We have a nice 5 waves down to 30K, 28,800. And then we have a 3 waves up in X. If you remember this picture, it's at any tree, okay? And then we can also continue to look Bitcoin this as an impulsive move down, although I must say I don't like it too much to look at it impulsively. So we have to look this as a wave 1, up in 2, down in 3, correction in 4, and a big wave 5. To the downside. You can subdivide this into this manner, but I don't like the look of it, but still it's valid. I cannot argue it is valid. So this will be a pullback in this B wave, which you can see here. Let me just show you as a reference again back this picture. So this will be this will be that B wave pullback here that we see. and then consequently we should have a 5 waves down. So that's why I have this as a 5 waves down. I talked about this with my members in trading analysis. So if we see a full 5-wave move to the downside, that will actually increase probability that this pattern potentially is unfolding, and in that case, next level on some breaking news, we might see a hard move through 30K, and then fourth wave can actually kiss it from the opposite side as a resistance level, and then fall down to this 22, 23, 20K, where you have many things as a support. You have a base channel, you have on weekly, I talked about this many times, you have also 200 moving average, you have many ratios from the larger and smaller degree, you have a 38% retracement levels from this secondary wave. So I think this is very visible, I think, for many technical guys. So that's why I was more leaning towards as well triangle, and I'm still has until I see 5 waves down. So we are still in the midst of a sideways move. As I said, just to finish up with the Bitcoin, 52, 56K is favored for the D wave. In a case we see 5 waves down, I will more leaning toward a very sudden and very sharp break of this 30K, and actually finally June, July, August, reaching this plethora of support level in Bitcoin, which I already explained. So situation on the Ether is the same. If we look the longer time frame of Ether, the same thing. We have this 200 moving average here and 38% around 1,000. This is the worst case scenario. This will be a 3 waves down, 3 waves up, 3 waves down. So it will be a little bit of a different structure, WXY. And it will not be so complex as we have it, because in Bitcoin we have a flat before that. Bitcoin and Ether has a high degree of correlation, but anyhow, since the Ether was doing a catch-up with the Bitcoin, some discrepancies in this type of forms appeared a couple of times. I have tracked that. My original wave count, as you know, is a triangle, still as in Bitcoin, so this will be some type of the D wave. We didn't reach my targets. It came very closely. Still, I would like to see more upside towards this zone, 3,700, 4,000, and then 3 waves down for a final E wave, and then a continuation of the upside. My secondary scenario is that the B wave is done. If we see 5 waves down in the initial impulsive move here, that will actually most likely increase probability that Ether might continue further downside, testing some of these levels between 1,200 to 1,600, actually following Bitcoin on the downside. So I think that's relatively very clear, guys. We also have a couple of charts which we track with our members, which is we like also as a project, and generally we like Polygon, or known as a Matic. So we do also have a couple of larger time frame wave counts for Matic, which we think is going to go on the upside. So this can be also ABC to the downside with some lower targets as a worst case scenario. Otherwise, it can be also a triangle with a little bit complex finishing here. So it can be also a wave 1 down in 2 and up in 3. So I'm kind of looking still. What is obvious for Matic, it's definitely on the larger time frame. We do have an intermediary move upside in a wave 3. If you go and look at the wave structure, you will see Polygon has been kind of moving nicely in a wave 1, very complex wave 2, and then here we are in intermediary wave 3 of the primary 5-wave sequence. We had a wave 2 here, and now wave 4, green wave 4 is developing. As I said, worst case scenario is this base channel here, which was also evident here on this small spike. We actually, I remember we vividly told our members to go in here on Matic, and we exited around the highs. There is a couple of fib ratios which explains this. This was not so difficult to see because the base channel was very strong. So I'm still kind of playing with this, looking at different combination, either WXY or ABC or a triangle. But nevertheless, obviously, we didn't see a 5-wave move from lows. So Matic is still not ready to give us a sign that we have a reversal. And we still need to be patient to wait for that. Okay. There is also a Dogecoin which went on the upside, but actually was immediately sold. Still nothing there. You cannot clearly count the 5 waves. It can be a leading diagonal, but I would like to see more evidence. You know, 38% comes around 0.08 with a little bit more downside. Binance Coin is also trading sideways. We are looking for a potential also triangle in a Binance Coin or a complex correction a little bit lower. But anyhow, for us, Binance is still in the upside regime in the intermediary wave 3 before we go in a bigger correction. So overall, we are staying bullish on cryptos. We are just assessing this very difficult times, very difficult environment for the risk-on assets. And we are looking actually where is going to be the best place to actually put a longer term trade for our members, because I think this environment is very challenging and the short term trading is here. I think it's a very useless thing to do. So in general, I hope you like our outlook for now. As we track this from 2021, this has been going so far nicely within the triangle borders. I'm just tracking the conditions as I explained, and these conditions I don't like in general. So that's why I have introduced, and I always do have a secondary scenario. I will not throw at you here 10 scenarios. I think that's useless completely. If you are doing Elliott wave in any form, have a 1 or 2 viable scenarios, kind of married with fundamentals. Giving 10 scenarios is no use for anybody. You just kind of show off your Elliott wave knowledge, like that's not very difficult to learn. So much more difficult to learn is through experience the details, where you can recognize much before everybody else what is going on, and also you need to pair these technical patterns with the fundamental outlook, and that is much more difficult thing to do than throwing wave counts for public. Okay, guys, so this is my outlook. So guys, let's look a couple of your comments and also a couple of charts. Felix CRB index we already looked at. Lawrence, hi, good to see you too as well. Oleg, hi Oleg, dobar dan. Schnitzel, of course, a legendary hello, Serbian. Hello Schnitzel. Elena, hello Elena, hi Alex. Rune chart, let's see rune chart or torch chain. I think we were looking for a triangle or a consolidation, as I remember. Rune chart is yeah, so still as you can see we are seeing I think we flagged this support on the rune chart. There is a 5 waves up, so I would like still to see how this will unfold. If this unfolds in a 3 waves and starts to move on the upside, I think potentially correction even might be done, and the torch chain goes further on the upside. Sorry guys. So or either A, B, C, D, and E. So same thing. I think support levels might be around here, which comes at 5, 8, or 6. This looks like a 5-wave move developing, so we might see some type of an ABC around these levels and then potentially reversal. So for now, it's a sideways, relatively good looking chart without any major break of this previous range. Jenny, yes, I already explained my WXY, which consisted of a couple of complex complex parts of the correction. I hope you liked it. Thanks for the insight, Alex. Would you look FTM or FXS? Let's see FXS. I don't think I have watched this one. Well, this is a relatively simple chart. We do see a potential 5-wave development here. So in general, you can count this as a 1, 2, up in 3, some type of a wave 4, or a still wave 4 ongoing and a wave 5. So that's not so hidden. If you look the wave structure, you have a nice 5 waves up in a wave 1, pullback in a wave 2. You have a nice, I don't like this wave 2 because we have a degree violation here. This wave 2 should be a little bit more shorter than this one. But since this is a new crypto, maybe we can also allow this in this sense. Usually when you don't have liquidity, these things can happen as well. So in that regards, you might also look this as a third wave completed, some type of a down in A, up in B, ABC, XABC, and either a triangle. So I think this one will still go a little bit more upside before you see some type of a 3-wave pullback down to this zone. The German Schnitzel, nice name. Yeah, German Schnitzel. Yeah, sorry, I hope you saw this. Still, let me just change the colors. I have that in a multi-wave. Multi-wave is a wonderful tool, and it's our preferred tool that we use within the trading analysis. So you can all this to do this much more easily, but it's a kind of a Ferrari for the eliticians. So sometimes it's a little bit more difficult to switch to this kind of a trading view setup, which is not bad as well. So Peter Kachavenda says heart. Thank you, Peter. Take a look at XRP and see if you can spot the triple sideways as a wave 2 that ends with a triangle. Oh my God, I'm okay. Let's look that. I'm not into that stuff, guys. I like simple things. Triple, dipple, schnitzel. I mean, it's too much. Let's see what the XRP. This is the market cap. Let me find the. I don't know. I mean, very complex correction. Maybe even it's gonna A up in B down in C, D, and E. Maybe it's gonna finish as a triangle. Maybe this is some type of a 1, 2, 3, 4, and 5, and the second wave. So anyhow, you don't see nothing impulsive yet here. So you can just basically look these support levels. So the support level will be here around 0.582 on this chart. So not much of a thing. If we switch on a daily level, if you look the move on the upside, you cannot count 5 waves here. As you can see, you can count only 3 waves. So I will not observe this as an impulsive sign that actually XRP is reversing. It looks like more of a corrective nature. So usually what I do here, I don't bother count this because the overall picture is just awful. Looking all of this together, it's just a big sideways look. As Terry is saying, look the grass grow. So I don't see anything why I should be interested in XRP still in this moment. So I don't know. This is just my view, okay? I don't like messed up charts. I like to have a little bit more visibility. If I don't know, I'm gonna tell you guys I don't know. And here I cannot tell even with a 20% probability what is going on. I have no idea. I can throw a triangle, I can throw even something more complex, or even you can go with a leading diagonal and consider this a secondary wave. So I have no idea. Can you please take a look at gold and silver? Yeah, I forgot that last time and I forgot it this time. I don't know why do I skip this. I don't have much to tell you on gold and silver. Same situation. Last time I had a discussion with some guy and I erased his comments. I mean, sometimes people are really, I don't know what to say. So I will explain you what was the problem. So we can look gold as an impulsive move. So this was a triangle finished. We have a 5 waves up. So I would like the gold, maybe even a small correction, finished or a little bit more downside, and then off we go on the upside. So that's one of the view many of us, not just many of us, but a couple of us in trading analysis actually represent. Terry and Bennett, I think, are a little bit more slightly bullish than I am. I still look for possible flat or a complex correction. So this guy was actually trying to tell me that I cannot have a last leg in 3 waves because the Z wave cannot, I mean, who even mentioned the Z wave? Usually when you have a Z waves, this is just going to be a triple zigzag. This is not a triple zigzag. This is just a double zigzag connected with the wave X. Yeah, simply very clear. You can search that in any Elliott wave book. So if we develop 5 waves down, this type of corrections are 3-3-3, so you can get instead of flat 5 waves, you can get 3 waves down, 3 waves up, 3 waves down, and that's it. For that you need 5 waves down in A, up in B, down in C, down to this 1600, 1600 50 and 1600 levels. So for now, it can go either way, really. Also, I don't like silver because I have also mentioned on gold, I didn't like the fact that in this geopolitical situation, gold actually just managed to do $200. That is something unseen from my perspective. I'm in markets for like 20 years, even more. 20 years around. So I have seen even less troublesome situations when gold will go like $500. So 2008, gold went $1,000 on the upside. So in this almost on the verge of an atomic threat, gold went $200, and that's all it has did. We are hearing some of the possibilities of the gold to be linked and traded for oil from Russia and China, vice versa, yuan and ruble backed in gold. So I mean that's all good and fine, but I want to see also some confirmation on the charts, and I don't see that for now. Simply I don't. Okay, so silver, the same thing. We do see silver breaking down without tracing 5 waves up. As you can see, we are back in the channel. Almost, this looks like some type of a 3-wave move. A little bit more downside, even the bullish wave count and possibility will be invalidated. So most likely this dreadful consolidation of over a year and a half will still to go sideways to a little bit lower before we go higher. So silver also didn't perform anything drastic in this situation. Anyone looking for oil? Alpha Finance Lab. Whoa, what a fancy name, Alpha Finance Lab. Let's look for that. Lots of these new projects get these fancy names. Did you notice that we have so many projects that I mean, everybody now is giving some rewards. Even if you go and just be somewhere, they give you some reward for that. They're trying to attract traffic. If that is the chart, I have no idea what's going on here. I see only 3 waves down and maybe 5 waves up. Maybe this is a pullback, but usually when I see these charts, I have no idea what's going on because there is not a lot of a history. What can I do here? It's just look for a typical technical observation. We were unable to actually penetrate this chart on the upside. And I need to see 5 waves up to make something of it in a manner from these lows. Definitely I would like to see that wave 3 backs further higher and actually pushes through this upper line to kind of have it more on the upside. Here I have no idea what's going on. It can also roll over and go further and make some leading diagonal on the downside. I have no idea in this stage. Okay, guys, let's look one more, CILR, and let's close this session. Well, I cannot find that one. If this is the right. Okay, seller network. It seems that we have looked this before. I was expecting this to continue higher. We didn't get that, and we went lower. So we can presume that this was a 5th wave on the upside. This is an ABC or a little bit more. Looks like still a possibility that this is a low. We need to see clearly 5 waves up. Usually when you have some retracements, and if you can count this as a wave 1 on the upside, in that respect, you can actually say with a small truncation that this is an ABC x ABC, and I would like really to see 5 waves up here to confirm at least some degree of a reversal signature. Okay, so I would like to see a previous swing high to be tested, which is around 0.09. So from here, if Bitcoin goes, I don't know if this is correlated with that, but definitely a 5 waves up will bring this and increase probability that this might actually finish into impulsive impulse, and after a small correction, it can continue on the upside. Okay, so it doesn't look so bad if we see 5 waves up. Wave count invalidation is here. Of course, in this stage, leading diagonal is also possible, which will allow, here in this case, expanding leading diagonal. But for now, we don't see a wave count invalidation, so it is still good to make 5 waves on the upside. Okay, guys, so yeah, Zilica. I think you mean on Zilica. Yeah, I have shared this with my members this morning. I think we are going to get some type if we see 5 waves down, so ABC to the downside, and then a further continuation to the upside. So I'm still waiting a complete correction to finish and the confirmation of a correction. Okay. My dog wants to come in for 15 minutes. He's standing on the window. Hey, Bella, let me see if I can catch her. I don't know if you see her. Hey, she's looking into the camera. Okay, guys. So yeah, yeah, if you like to check out trading analysis, we have a crypto membership, a very nice bunch of people which are losing their hair with me because I am immensely patient, and for now, fortunately, that has been proved as a good strategy. And as I said, it's better to be patient than broke. I don't see, as I said, retail as a future mover in cryptos. I think many of the retail space was decimated by these moves, especially trading on such a high leverage. So I do see also retail to be on a very short income possibility to invest further because of the current environment. So I would like to throw out the thesis. Of course, many people already know that next move up will be produced either through some regulations, favorable regulations, or some event or inflation hedge or store of value or a dollar devaluation for the cryptos to continue further up from the institutional side. So where did I was at Trading Analysis. So visit us. We have an extensive crypto service, members webinars, Discord channel, and you have me on the disposal for any chart you want to have. And click the like button, subscribe, help us. I must say, I never said this up to now, but likes are small, guys. Subscription are small. Channel doesn't grow. So help me out. No, I'm joking. You don't have to if you don't like. So see you next week, guys. I hope you liked our review. We are trying to be more sensible, moderate than kind of I will say crazy bullish maximalist, at least for now. So see you guys next week. Bye bye.